So in today's video, I'm going to show you how I caught a 2R trade using the NY continuation cycle. Okay. Now, this video specifically is for you guys who are decent at daily buyers, right? You don't have to be crazy at daily buyers, but have a decent ability to read daily buyers, but you're lacking that sort of intraday slash lower time frame structure. Okay. Because it's very easy to say, okay, cool, I'm bullish on the day, but still get caught up in sort of the intraday move, right? Whether it be that you're on too low of a time frame or you're just lacking structure, right? This is where the cycles for me come into play. Okay, so I wait for number one, sessions to do specific things, number one, but number two, during set cycles. So for example, this is an NY continuation cycle. During this specific cycle, I want to see lows and highs get made at set times, right? And I haven't just made up this time. This time is literally based on all my sort of back-tested data examples. Then once we wait for our lows and highs to be made at specific times, one, it stops us from getting stopped out at other times, right? And potentially getting stopped out and then missing the move. And then also it just limits our ability to spam trades, basically. Okay. But the thirdly, and most importantly, this is what I've come up with in terms of the most high probability times for the lows and highs to get made, right? So this specific trade, right, I was confident in the daily bias, and then I've applied this intraday framework to execute on the bias, basically. So just quickly before I do dive into it, I just want to show you that I did in fact call this on or inside of my Discord Premium Outlook channel. If you're in the Telegram, you would have seen I posted these up as well for you guys to see. If you do want access to this, where I'm literally sort of walking through the trade live, telling you exactly what I'm looking at, then you can go ahead and click the first link in the description. There's a 7-day free trial, so you'll be able to watch me do this and scroll through this whole channel if you want to take a look at that. Okay, so anyways, let's just get straight into the video. Let me delete this and let's go over to we'll go over to DXY first. As you guys already know, if you watch me for a decent amount of time, I do like to frame my ideas off DXY, especially when I'm trading things like Euro. Okay, so for you guys who didn't watch my weekly outlook, right, I'll just go over higher time frame bias just for you guys so you know where we're at. Based on where we are higher time frame, right, I was looking for price to draw to this level here, being the monthly FVG. Weekly, we had just closed through this inversion gap and we'd rejected it and moved away. So I was looking for this following week to then just continue that push lower. Okay, we had this FVG, which I was looking for price to get traded to, and this is mentioned inside of the Outlook, which is inside of the Telegram for free. And you'll notice, right, where ITP is very specific, and essentially we just missed this high. Okay, so basically I was looking to trade the protraction of the week, right? So my original bias was I wanted to see price start. So this is Monday, yeah? I wanted to see price open up, right? So it'd be around this level, tap this FVG Monday or Tuesday, and then start going lower. That was the idea on the week, okay? If we then jump down to exactly what Monday did, right? Monday actually went ahead, started the week off by running lower and sweeping out two previous days lows, right? So if we mark that on 1 and 2, now if you literally go ahead and back test this sort of signature, when price goes ahead, runs out two previous days lows and then runs back inside of a range, typically that move is going to be fairly strong to the upside. Okay, so you can go ahead and just like test that out for yourself. Let me just mark those on. All right, cool. So now we move on to the hourly, right? Now we've swept liquidity, right? And now I sort of move on to trying to understand which arrays are being respected on a 4-hour/1 hour basis. Okay, so we'll just stick to the 1 hour here. I think it paints the picture the best. The way I'm looking at this is I want to see this FVG is like my draw for the day. Okay, as we're moving higher, right, and just to give you some context, right, my trade is situated in and around here. Okay, so again, you can ignore sort of this, you know, I'll get rid of it so it's easier to understand. So one, I am looking at this as like a market maker buy model, and what that means in simple terms is that I want to see bearish arrays being used as bullish arrays, okay? And any bullish arrays that form, i.e. down close candles, they should be respected, and price should expand to the upside, okay? It is also possible though that in this sort of buy program that old lows can get respected, right, or act as total soups to go higher. So essentially in this moment, right, before this 1 hour candle closed, okay, and this, I'm pretty sure it's a new 4 hour candle here, okay, we opened up this 4 hour candle, and in my mind I was like, cool, I want to see ideally this push from this immediate rebalance level. Okay, so if I just mark that on and push that to the side, I want to see price push from this H4 immediate rebalance level. I'm also aware that we could run this low and then go higher. However, I'm not going to, I'll gladly take the loss trying to buy from this level if it's a good A+ setup. Okay, and that's sometimes a bit of a mentality shift you have to have, because I've noticed this, and even in my past, if I thought potentially price could push from here and push from here, I would often just wait for the lower area. But realistically, if price is presenting what you need to see in your trade idea at a higher level, right, that is perfectly reasonable to expect a continuation from, then you effectively have to play that level. Okay, so 4 hour immediate rebalance, right, 1 hour order block form, right? So realistically, all I'm looking for at this point of time is a retracement into the hourly order block and a push higher, because my drawn liquidity is higher. We're in a buy program. Bearish arrays are being disrespected, bullish arrays are being respected. Therefore, I'm anticipating the order block to be respected and push higher. Okay, I hope that was concise enough. So just to show you the 50-minute quickly as well, and this is where the MY continuation comes in. Based on the rule set of the MY continuation, I want to see a run in London. I then want to see some sort of retracement, and I want to see that low get made between 1 to 2 o'clock, right? I have a 10-minute extended window, but let's just say 1 to 2 o'clock. That's GMT, that's UK time, GMT, right? So that is, if we just put New York time on, because I know a lot of you guys look at it in New York time, that is 8 to 9, okay? Let's go back to, there we go, that's Lisbon. There we go. So, like I said, London gives us that impulse on the day, right? That's effectively telling me, okay, cool. If London has impulse and my draw is still available, then I'm going to look for a continuation during New York, okay? Pretty much. We know already, right? And I've given you the higher time frame sort of framework here. We swept out 2 previous days low. Okay, if we're looking and thinking about it from a weekly power of 3 expansion standpoint, I know that this is my draw, okay, because I'm effectively trading the protraction of the week, which basically just means, you see how a bearish candle looks like this? Instead of trading that weekly expansion lower, right, like this, I'm trading the move up into the array that I think the high of the week is going to form, okay? So from this level, right, we can use hourly closures to help us have confidence in this setup as well. However, that's not like strictly part of my plan, if that makes sense. But you can clearly see that the hourly order block gets tapped at 12, a low gets made at 1, okay, rejecting that level. Then based on that rejection and the respect of this hourly order block, I'd want to see a run higher, okay? You can even see how intraday we're building up even more equal highs here, so a ton of liquidity up here, plus if I go on the daily, it's going to ruin it. Oh no, it's actually right again, plus this daily FVG after sweeping 2 previous days lows, okay? So let's jump to the more intraday time frames. And another thing I want to get across here is look how much narrative we've built before we even get to the lower time frame. So yes, like when I'm watching this, I'll jump to the 15 because I want to see what the cycle looks like. However, I'm not using the 15 in this position to try and forecast my setup, okay? So for me, I want to see like the 1 hour or the 4 hour on site on my trade. And the fact that the 1 hour order flow, right? So in terms of arrays, specifically just order blocks and FVGs, the fact that bearish FVGs are getting disrespected, forming IFVGs, and bullish order blocks are being formed, that's my sort of idea that the 1 hour is on side. Okay, so from there we get the retracement during New York into the area, and 15/5 minutes sort of my entry protocol timing. As you can see, the low gets made here. Okay, so 13:35, that's perfect, right? Typically I love to see the low get made at like 1:30, okay, again UK time, which often lines up with that news release. So we come inside, we tap the level, we run away, right? Very simple entry model. We don't need to overcomplicate it. It's a market structure shift above a swing high and then an FVG that forms. Okay, now I took this trade on euro. I'm going to break it down on euro in a second. You'll see the entry is slightly different, and I'll talk about that in a minute. So tags that level, right, and we run higher. It actually did offer a scaling, right, and I've journaled that as sort of my quote-unquote mistake, or what I could do better was to scale in, which is something I'm working on personally. We ran here. Now you would have noticed in the Discord, I ended up taking my position out around this level, very close to the previous day's high, right? And you're probably thinking, first of all, you might not even believe me, which again, you can go ahead and look in the Telegram. I've posted my screenshot of my trade. But basically, I took profit just before we took out previous day's high. Now, admittedly, I do have a habit of closing trades before we reach the level very close to it, right? But that's not actually the reason why I did this in this specific example. The reason I did this is, if you've watched my prior video, which is basically a concept that has a 78% success rate, is basically when we reach for a previous candle's low, okay, it's not very likely, right? And again, it's possible, but in terms of statistics, it's not in my favor for price to go ahead and then reach for previous day's high. And as you can see, it looks very close, but we don't actually reach the high. Okay, you can see that there. So basically the prior video is on the idea that there's a 78% chance that price is going to reach for either low or high. Right? I don't have the specific stat right now for low and high. If off the top of my head, it's probably like 15%. So I know, based on my chances here of my trade hitting TP, which is the daily FVG, it's fairly low, right? 1.5 out of 10 chance. So we got extremely close, right? Anything past this high, right, I'd need to be sort of fairly on the ball in terms of taking profit, because we're entering the final 30 minutes of the session, which is normally my TP window, okay, for this specific cycle. So the other reason why this cycle, or why I use cycles, is because for each cycle I have a different TP set window, right? So for example, in London, I'll have a specific TP window. For New York, it's the final 30 minutes of the session, yeah? So in this specific cycle, I know I'm trying to get out in that window, because a lot of the time New York would have been sort of finished running, and that's where I'm looking to bulk or get out the bulk of my position, or all of it, right? Majority of the time, all of it. So in this example, you can see I've gone ahead, taken profit, and it's worked out very well. And funnily enough, we don't actually reach for the high, which in the back of my mind, I mean, I thought it was going to reach it, right? There is still a small chance of it happening, but and we, because we were so close, I thought, oh, it's obviously going to hit, and yeah, it just rejected it. So if we go on euro as well, I just want to show you from the sort of euro standpoint how I got to this idea. So again, still in terms of a weekly expansion, I wanted to see these equal highs get run out, but again, I'm playing that protraction on the week. Okay, this one doesn't have a specific FVG, so basically my draw was just this low. Technically speaking, I was actually looking to short NU originally, and because NU lacked displacement, I didn't end up trading that on the lower time frame. I'll actually go over that as well, because it's a really good study, and it'll probably help you guys out a lot as well. So we swept out previous day's high, sorry. We had the strong displacement lower, okay. I'll go on the 1 hour, because again, it looks very similar. Again, you can see the presence of bullish arrays in this case being disrespected. Price running lower, price forming a bearish order block, and that's what we framed the short off of. Okay, delete this. Again, just marking on the position. Very simple. So like this is where the cycle comes into play, right? Because it would make sense, right? How there will be some guys looking for shorts inside this level after a market structure shift, and they're going to end up getting stopped out, right? Now, again, I wouldn't even say that's a bad trade, right? If you're just looking at the technical standpoint only. However, this is why I do have these set timing rules based on, again, the trades that I've evaluated and based on my data. These are the best sort of windows I have for this specific cycle. So again, we come up, we create the high 135. And just sort of a caveat to that as well, like you're going to see sometimes trades run without you because they don't fit certain timing or cycle rules. And again, that's just part of the game. So this one, we have the market structure shift, but we don't actually get the retracement into the FEG, right? Now that wasn't my entry. My entry was the 15-minute immediate rebalance level. So I went on to, so after we got the 5-minute closure, okay, here, right, I knew already that wherever we retrace, I'm happy to enter. I don't need to wait for another 5-minute candle to print for the FEG to form to then play that. I went on the 15, and this is why, see, a lot of people think like if you just keep going lower, you're going to get the best entry, but this is a clear example of me going from a 5 to a 15, finding a better entry that actually tags me in, and then price running, right? And if you was just looking at the M5 solely, you would have missed it. So let's just put this on here, M50 immediate rebalance. I entered on the immediate rebalance. Okay, so after this 50-minute close through, I was like, cool, we don't necessarily have to make an FEG run from that. This 50-minute candle is going to open up. If we can just tag me in here and then run lower, I'm happy with that. Okay, so instead of, again, putting my entry here, I entered on that line. Stop at the top. Again, could have been shorter. I wanted to keep the stop consistent. From there, I ended up taking profit around this area. So it's just over 2R. But I remember it saying around, I think it was 2.5. But in terms of what I actually got out of it, it was pretty much just 2R. So let me just show you what I saw in NU, because that actually did end up running as well. That ended up running way more aggressively than the rest. And I can use the prior statistic from the other video to actually sort of support this a bit more. So again, NU actually has the daily FEG that I wanted to see price get traded to on DXY. Right, if you see here, DXY, FEG, NU, FEG, right? Okay, again, remembering that this was the protraction on the week. Now, NU actually had SMT with DXY here. So NU didn't reach for previous day's high and failed to. So now I know that this low has a 78% chance. And if you're hearing me throw this statistic around, you don't know what I'm talking about. If you look for the video underneath this video, it's basically, it'll be titled, this concept has 78% chance of playing out. You can watch that. So anyway, the previous day's high doesn't get reached for SMT. So I know, okay, if order flow is trending towards this low and my bias is correct, we have a 78% chance that we should run towards this low, basically. So as you can see, SMT, sweep of this high, run lower, and I was looking for, right, after this 4-hour closure, and if you check the sort of premium outlet log, which I posted to the Telegram, which is basically what I sent to sort of like my group as it's playing out, this was the area that I ended up saying, cool, if we don't run from here, then I don't think this is going to play out. Or it is the area that I believe it should run from. So H4 immediate rebalance plus IFEG, tap there. This following 4-hour candle then goes ahead, melts off. Yeah, very, very, very nice. And if we look in terms of cycle as well, we have the London expansion lower, the retracement, the high made again between the window that we like. There was this trade, right, that ended up giving a market structure shift here. This was made outside of my time window, right, or outside of the window that I want to see the high get made. So this is like a perfectly fair trade, right, if you weren't looking at timing cycles. Now there is a cycle for the first hour, but this one doesn't fit the rules basically. So market structure shift, CSD, even if you go on the 5 minute there, it looks great, right? Like if you tripped up on that trade, it's fair play, like the technicals make sense. However, it doesn't fit with the rules, and this is why, again, I'm showing you the effectiveness of this cycle. So again, high made, there's an entry right at the top, which is just a 5 minute CSD. In all fairness, I don't think I would have executed on this. I had this low marked, and a lot of the times I'll have like a swing low marked, and if we don't break it, I won't take it. Especially like in the moment, I probably wouldn't have like consciously noticed, oh yeah, 5 minute CSD. I would have been a bit more fixed on this market structure shift, which again, we don't really get a closure until this candle, which you can clearly see I'm not going to get on that after that. So I was actually fairly happy that I did switch asset, because I wouldn't even have been in this trade otherwise. But if this fits your rules and you feel like you would have noticed this asset entry criteria wise, then good for you. The R to R on this is pretty crazy, right? Again, I don't know how you guys want your SL, but again, R to R on this is insane. So very nice trade. Hopefully this made sense. And in terms of, again, using the idea that we know previous day's low or high, or previous week's high or low should get ran to, with around a 78% chance, with order flow trending towards the low plus the daily CB as draw plus the daily cycle, you can start to see how we're really piecing together everything here and layering on a ton of different confluence to come to a trade that is, in my opinion, very, very, very high probable. Okay, so yeah, if you guys found that useful, then let me know. If you guys have any questions, you can ask in the comments. But yeah, hopefully you guys enjoy this, and I'll see you on the next one.